The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Welcome to Winning in Retirement with your host, Brian Akers from Akers Financial Group. Here with me today is certified financial planner practitioner, Jeff Akers. Good morning, Jeff.
Good morning, Brian. Good to see you.
It's awesome to have people here, to be able to see you. And welcome to our radio show, Winning in Retirement. Yes, it's Saturday morning, and it's time to talk about what we all been thinking about. And guess what that is? Overcome your retirement fears. Yes, today's topic is overcome your retirement fears. A lot of people have fears this year. A lot of things going on. A lot of things that causes fears when it comes to retirement. Those that are getting ready to retire. Those that are already in retirement. So what Jeff and I have done is put together a show, an excellent show that's designed to help you be winning in retirement, to cover the many aspects of things that are going on right now, especially in retirement planning. This is a show you don't want to miss. Are you ready to go, Jeff?
Oh, yeah. We got a lot to cover.
All right, there is a lot of fears this year. I'll just go ahead and start with that, Jeff. What's your thoughts, and what have you experienced by working and meeting with people?
Yeah, there are a lot of fears. Folks coming in saying, okay, can I retire now? Or if they're already retired, they're saying, can I stay retired? Am I going to be okay? And even folks who are just saving for retirement are experiencing that fear of, am I doing the right things? Do I need to change something? Because I'm afraid that things are going to go down and I'll never be able to retire. And so we just have to go through the truth about what's going on right now. And I remind them that, Brian has been at this for more than 30 years. I've been at this for about 20 years. We've seen situations like what's going on right now.
Absolutely.
And so we can look back and say, well, here's what happened before. And so here's what's going to happen going forward, most likely, if history plays out again.
Yeah, there's still a lot to talk about today, but let's think about this. When people come in and meet with us, we talk about where they are. And some people are coming in and say they're just not sure. They're scared. They're nervous about what's going on. They don't like what they're hearing. They don't see a future being bright again. They think it's going to stay the way it is at the current moment. And so there's a lot going on. It causes a fear. What does fear typically do to people, Jeff?
Well, fear can cause people to freeze.
Sure.
Not do anything, or it can also cause them to run out and make a rash decision that's probably the wrong decision.
Yeah, absolutely. Like when I hear you say that, I think about concepts such as, you need to protect your money, where you need to put 100% of your money, protect it, lock it all up so you don't lose any penny.
Right. And I've also had people run in and say, I saw on TV, I should buy gold. I want gold, lots of gold.
Right. And so it's an overwhelming answer that's outside of norm. If that's an answer that you're trying to seek, or you think that might be the answer of the moment, we want to counsel you not to do that. We want you to think about this. Retirement fears should not lead to bad decisions. These fears need to be understood about what they are, what is real, what's not real, how it affects your plan. Your plan, not everybody else's, not your neighbors, not your friend, not your relatives. Your plan, how does it affect you?
Yeah, lots of folks can come up with a plan for you, but what we do is work on your plan. What fits your situation? What's the right answer for you? If someone comes in and there's debt, well, then part of our plan is going to be we need to get out of debt.
Sure.
So there are lots of things that are individual to folks, and we need to work with those and make those our priority for you.
And another thing I'm thinking about is somebody walks in for like a first initial meeting with us, and they've done nothing, and we talk, and then their answer is they want to do nothing. They're nervous about doing anything. What do you do as a client or a possible client like that, Jeff?
Right. I had someone come in now, they want to retire.
Okay.
But their plan so far for retiring has been, well, I'll save what I can to my work plan, and they've got a pension. And is that good enough? Can I retire? So they came in with that question, can I retire? They make a lot of money, but they also have debt, and they also spend a lot of money other than what they're saving to their retirement plans. So I've got to tell them, well, you can retire, but your spending has to change. There are a lot of things that need to change in order for retirement to work, or you keep working. Right. But the way things are right now, no, you can't retire because of these things about your financial situation, not the environment around us, But the answer would be the same if the economy was great and the market was great. The answer would still be, no, you can't retire.
Yeah, so some people actually come in where they took all their money out of the market maybe 6 months ago, a year ago, and they've left it in there earning zero and have done nothing, and they don't want to make any change. Then there's some that have all their money in the market, and they might have been very aggressive, and they rode the wave way up, maybe through last 2021 bubble, and then back down, and they're just going to hold on tight. I'm hoping that those stocks come back. And one of the things that I try to counsel them about is just history. If you think about the 1999 bubble in 2000, 2001, it sort of burst on the internet and the tech stocks. There's definitely some winners that came out of that.
Oh, yeah.
But then there's a lot of losers that we don't know about anymore.
And if you're just looking at the index, then that took a while for that to recover, a long while.
You're talking about NASDAQ. NASDAQ
right.
hit its peak about beginning of 2000, January 2000, and then I think it was 14 years before it got back to where it was.
I think it was 15.
15 years?
Yeah, I'll stretch it a year.
Okay.
But then it took off, and we saw that again back in 2020. All the tech stocks, it was like, yay, all the tech stocks. Mm-hmm. But this year, the tech stuff is what's down the most this year. So if you're in for volatility, you need to be young and have time to let it recover if it's going to be volatile like that.
So some of the thoughts you have to have when you're talking about investing is your investments designed with growth or value? Those are different styles of management. Are you a passive index buyer only, where you have a committee that picks stocks based on size, not based on anything else? And then it gets overweighted, and some stocks have done well, and it sort of goes up quickly, and then it goes down quickly because those stocks have sort of answered to their PE ratio and come down. So in proper planning, overcome your retirement fears, you need to know what's going on so you can make decisions and take advantage of the opportunities rather than be overcome. Now, not sure what to do, that's happened a lot with new clients. They come in, not sure what to do, and they know they need help. And I think that's exactly the right thing to do, and that's why you should seek a certified financial planner.
That's right. I use an example with some folks that you go shopping, you go in the store, and you find a shirt or a blouse or something, and it's on sale, and it says 50% off. Mm-hmm. And you look at it and say, boy, I really like that. I want that. I'm going to get that. I'll wait until it's full price. Then I'll come back and buy it. Nobody does that in their right mind, but sometimes that's how we treat stock investing, is I'll feel better about it if I pay more for it. Right. And that's not the way to make money in stocks. Our emotions, we have to separate from our emotions and make good decisions about our allocation. That's what Brian's talking about with that value versus growth. Do you have the right allocation for you and for your future retirement?
And what happens is you need to know where you are. We call that your unique financial fingerprint. That's where you start, where everything is, how you're allocated, how you save, and what your budget's like. And knowing what that is then allows us to say, yes, you are too risky, or no, things look good. You have all these things in place, and this is how it would work for your retirement. We take what's there and then build on it to fill in where you need to make it work and to make your retirement last a lifetime. We all want to retire and to be able to stay retired and not have to go back to work. And this year, being overcome with your retirement fears is something that's normal and natural because all the news, the information, the sways of the market. I think news channels want us to watch the news, so they make it extraordinary, extra special every day, extra the worst day ever type thing.
Right. It's always the worst day ever, and that way you'll tune in after the break. So that's just what they do.
Well, there's certain facts like that we were going to talk about in the second quarter of just things you need to know about what the real answer is out there versus what you might be hearing.
Right. This might be a shock to some folks, but when you watch the news, it doesn't necessarily mean that you're always getting the truth about what's happening. So,
well, you're getting the truth defined at that moment within a certain range, but you're probably not getting the whole truth that applies to your plan.
Right. Your situation.
Now, what happens is you got to seek out a financial planner, seek out an advisor, someone's going to help you overall. If you go to someone and their answer is this one product, you need to run away. That's not planning. That's a salesperson selling you one product.
And usually playing on your fears to do it.
Absolutely. I mean, they'll be talking about the roller coaster of the market and how you got to get off of the roller coaster, that kind of stuff. Roller coasters are usually fun for me,
right.
but I don't ride as many as I used to, but in my mind, I think I can.
Yeah, they're still fun.
Yeah, they're still fun. Maybe for somebody else.
Right.
But for all your money, you should not be riding up and down the market. You need to have it planned out. A plan is the answer to help you overcome your retirement fears. It's not buying a product or one type of solution. It's a plan.
A plan that incorporates everything, your entire financial life. Brian mentions roller coasters, and I like roller coasters, and sometimes I like the lazy river. And sometimes, we want to do both. So we need to have what do we need to have that's on the roller coaster, up and down, and what do we have that's kind of the lazy river?
You're still a youngster. You like that roller coaster, Jeff?
Yeah, I still like roller coasters.
Let your hair blow in the wind?
Oh, I got no hair, so that's not a problem for me.
All right, so this first quarter, we want you to understand that we understand the confusion, the overwhelm on people, the overwhelmness, I guess, what's the right word there?
Overwhelmedness?
The overwhelming feelings of all that's going on.
Right.
And we understand that we got to take a detailed approach to your financial plan to come up with your answer. That's exactly what we think is the right thing to do on how to handle what's going on right now. We don't want to enter into a recessionary future that might come, or a slowdown, or any type of period without a proper plan. Yes, we've always believed in planning. Yes, that's going to be our answer because it actually works.
And don't accept an answer that's right for someone else. You need to work on the answer that's right for you, your situation. That's where that unique financial fingerprint comes in.
Absolutely. You need to take advantage of what opportunities are actually here. Whenever there's something wrong, there's an opportunity. Your eyes can see what's going wrong, or you can see what's going right and what you need to put your money into. You also need to make sure you have a plan that's right for your retirement, for your income, for your expense, for your future. You do need to protect what you need to protect, but nothing more. Don't overdo, even on the safe side. Make sure you have a good balance to everything you're trying to do. At Akers Financial Group, we're local, we're independent. We don't report to a big company on Wall Street. We report to you. We do have offices in Lutherville and Forest Hill, Maryland. We have clients all around the country and even around the world. It's so easy to begin winning in retirement. You can call us for a free consultation with one of our team of advisors. You call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call back on Monday to schedule your free in-person or Zoom meeting with one of our team of advisors. Go to AkersFinancialGroup.com or call us at 833-946-7384 to start planning for your retirement now. Separate the noise from the news. We'll be back in 2 minutes.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I am Brian Akers. I'm president and founder of Akers Financial Group, and here with me today is Vice President of Akers Financial Group, Jeff Akers. Good morning, Jeff.
Good morning again, Brian.
You ready for the second quarter?
Oh yeah, we got to sort things out in this one.
Absolutely. The title for this the whole show is called Overcoming Your Retirement Fears. If you're in retirement or getting ready to retire, you have thoughts, and some mornings you wake up or nights you wake up and you have little thoughts that aren't good about what's going on. You're trying to figure out what to do. This quarter, we're going to address the following topic, and that is this: separate the noise from the news. What does that mean, Jeff?
So we hear a lot of noise. We watch TV. Clearly we listen to the radio because you're listening now.
Yeah.
And sometimes you'll hear people on the news talking about, how awful things are. And you hear words like recession and bear market and, inflation and all kinds of these kind of scary words that catch us. And that's kind of the noise. Yes, there's some news to it. Yes, some things are going on, but there are other things going on. You never hear a newscast start with, and the sun came up this morning, because it kind of comes up every morning.
It's actually coming up every second. If you think about it, as the sun goes around the earth, the earth goes around the sun.
Man, what century are you in?
I know, I said that to be funny, very funny. But honestly, there's a sun going down every second, all 24/7.
Somewhere around the earth, the sun is rising right now.
And it's happening also in retirement planning.
Wow.
Whoa, deep. Okay. No, separating noise from news. Noise. So If you think about constant talk, constant emotional talk,
Chatter.
you need to say, okay, is any of it true? It's almost like someone writes you a letter, and that letter says, you are the worst person I've ever met. And you listen to it, you read it, and what happens is you need to pick a couple things out that might be partially true, and you say, okay, I can fix this, I can fix that.
Legitimate critiques.
So in financial planning, you take a look at someone's full picture, the other unique financial fingerprint, and you say, okay, there's a couple issues that are exposed to what's going on right now. And so you take news, you get rid of noise, you take the actual news and you apply it to what's going on.
Right. Is it okay if I give an actual example of something that you hear one thing and it might actually be different?
I think you really need to. Yes, go ahead.
Okay. So here in Maryland, we heard about this tax law being passed for retirees. And the name of the tax law is the Retirement Tax Elimination Act.
Wow.
What a great name.
In Maryland?
In Maryland.
That's awesome.
Retirement Tax Elimination Act.
Okay.
Okay. So does it eliminate retirement taxes in Maryland?
Absolutely not.
No, it does not.
It takes it away for some people that qualify under all the rules.
What, right. And if your income is low enough, but I mean, there's a tax credit. And
let's explain let's say it again, Retirement Elimination Act. Elimination.
Retirement Tax Elimination Act.
Okay, Retirement Tax Elimination Act. First thing, there's no retirement tax. There's no such thing. It's called an income tax.
Right.
The next thing is, what is the law? And it came into effect July 1st, I believe?
Yes. And so if you're single and your income is $100,000 or less, then you get a tax credit of $1,000.
So that's if you're over 65 years old.
Yep.
And no matter anything else, but if you're single, you get a tax credit. What's a tax credit?
So a credit is some of your taxes is paid by the credit.
Okay.
So let's pretend that ordinarily you'd have a Maryland tax bill of $4,000.
Okay.
And you get a tax credit of $1,000.
Sure.
Well, now what's left is $3,000 that you actually have to pay.
Okay.
Okay. So $1,000 of your tax was paid by this tax. Now, it's also important to know this is not a refundable credit. And so that means if your tax was going to be less than $1,000, let's just say your tax was going to be $700, there's a $300 gap, you're not getting that $300.
Okay.
It's not refundable.
I think that makes sense.
Yeah. That's what's in the act. But now for that person, their retirement tax was eliminated.
Right. So at the normal Maryland tax rate, a tax credit of $1,000 is worth a little more than $13,000 of income where you don't pay tax on it.
Okay.
It doesn't mean you make $100,000 or less and all of it's eliminated. That's not what happens with this law. Nope. This law is only around for 5 years under the way it's designed right now.
Yeah.
There's also caveats in the law for Maryland to take it away based on budget changes. Just saying.
Yeah, that's fun. So
what's the name of this law again? Retirement Tax
Elimination Act.
All right. So the idea for single is $100,000 and below, and for married filing jointly is what?
$150,000 or below, and your credit, it's not $2,000. No, it's $1,750.
So it's not double.
They couldn't double it. They just couldn't double it.
They also couldn't double the income side.
No, they couldn't double that either.
The income up 50%, the credit's up 75. I guess it's 75%. Depends on the math.
Yeah, it's up 75%.
All right, so $1,750 is the tax credit, like Jeff was explaining earlier. It goes against the tax you owe.
Right.
You don't even have to be retired to get this.
Just be 65.
Yeah, so it's like the 65 Tax Credit Act.
Yeah, but everybody that's 65 is clearly retired according to the state of Maryland.
Oh, yeah. Well, but the idea is this. Does it help? Yes. It's a tax credit. If you're over 65, you need to look at your income. Don't make $100,001 this year. If you make one extra dollar, you won't get the credit at all. There's no phase-in.
Right, but when we read the headline without looking at what's in the story, we're not getting what's really going on. And it's the same thing with these bills.
Yep. So the idea is the noise, the sales, what they're pumping out there is that, oh, I've given you all this extra credit. People need to retire to Maryland. It's a really good deal. We love Maryland. Maryland has wonderful mountains, wonderful oceans, wonderful place to live. That's a great way to retire.
It's America in miniature.
Our taxes are not the best for retirement. This is another small improvement for retirement. We have a great healthcare system, which I think is a great reason to retire in Maryland because of a great healthcare system. But the taxes are something you have to know that they will be there and they will stay.
Right. If taxes are your primary focus or your only focus, then you're going to say Maryland's not a good place.
Now, Maryland is one of the 37 states that actually eliminate some of your Social Security taxation once you're over 65. They've done that already. Now, that doesn't totally wipe it out, but there's an income limit that they waive. It's over $19,000, I believe.
Yes.
I forgot to look at the chart.
I forget the number.
But that eliminates each person. You have a pension or Social Security exclusion. That's really nice. If you are a first responder, they've added some exclusions for that, which is nice. To help keep them there. They didn't give all their income, only $15,000. So there's little pieces that are helping. That is good for retirement on the news versus noise. Now, the problem is there's lots of noise out there, and we want to cover a few of these as quick as we can.
Yeah, now we got to be fast.
Well, the Maryland one, we want to wait to that became the actual law, and then we wanted to tell our opinion of it. Officially, it's good. Should rename it something else. Now, it goes like this. The market's down terribly since January 1st.
Right.
Now, why do we look at January 1st to now? If we look at 1 year, market's pretty flat.
Because every chart says year to date.
Right. That's sort of like, okay, the market only runs from January 1st to now, and you got to watch that. Well, the thing is, the market was up as we entered this 2022, and then the market has come down. Market, Dow, S&P, and NASDAQ's been down. NASDAQ's been down longer for more than a year. It started coming down. If we think about just during the COVID time period back to March, right before COVID came out, market was at 29,300 on the Dow. And as we record the show, it's still above that.
We're above that, yeah.
So we're not really in a deep doldrum of a stock market crash. We're sort of in a correction.
It's a short-term correction.
Absolutely. It is a bear market because of the percentages from the top. But the top, I believe, was the word frothy. I think it's a word.
Artificially high?
Yeah. So the idea is when you look at stocks, you got to look at it in perspective. If you look at where we've been, where we are, depending on how you invest. If you were in value stocks and not growth stocks, you might say, the market, they say it's down, but why am I up?
Right. Or not down very much.
Yeah, and that's value stocks or typically dividend stocks. They're actually the right stocks to own in an inflationary time. If you had to think about what kind of environment we're in an inflationary time, not a recession yet. Inflationary. Inflationary is the reality that things cost more. Things are basically when they calculate inflation. I think one of the things I heard this week was 9%, and half of that comes from oil and gas. I believe gas prices, once the 4th of July happened, now gas prices are starting to go down all of a sudden.
Right, they have started down.
And that's happened every year.
Yeah, go figure.
But gas prices come down, then inflation will go down for the next month or two.
And inflation is one of those words that we hear on the news, and again, it's a headline. And there's a misconception out there that if the inflation rate comes down, we start to think that our prices are going to come down.
Right.
So that's not entirely true. The prices have gone up, but now next year's inflation is based on that already higher price. So the inflation rate might go down. It might only be 3% or something, but it's still based on that higher number for this year. So inflation, you hear about, it's going up. Inflation's going to come down. Inflation coming down doesn't always mean cheaper prices. With gas, it does.
And so people start to panic about mortgage rates going up, and there are people get out there and refinance again. The problem is that rates have actually almost completely doubled in just the last little over a year.
It was quick with the rates.
Absolutely. Has your bank rate increased by double?
Oh, no. The banks will be slow to...
But a double, 0.25% to 50%. Yeah.
0.01 to 0.02?
Yeah, it probably did double, right, officially.
Yeah. Woohoo.
But it's nowhere near as fast as the mortgage rates might have done. So the reality is this, is that inflation and interest rate rising are real. The hard part is we're actually not in an official recession yet because of the growth rate. The growth rate of the economy is still there. It's slowing down. That's the reason they're raising rates, is to slow it down. Mm-hmm. And that will, I believe, lead to a version of a recession, depending on how America responds. And I think if you watch the flow of cash, the flow of money is really the key to what's going on the next few years here.
Right. And even if we see a recession, a lot of the time that's accompanied by a loss of jobs. If you're retired, you're not working anyway.
Absolutely. Now, this quarter, second quarter, has flown right by. And so what we're going to do is this. I'm going to tell you that the best part of retirement is really when you get your time back. Because the reason you want to retire is the freedom to be retired, where you can decide how to use your time. Before retirement, your time is tied up by other commitments, mainly your job. A lot of that goes away when you're retired. Your time is now consumed by things that you want to do. It's so easy to begin winning in retirement. Go to our website at akersfinancialgroup.com, scroll to the Schedule a Meeting section, and let us know you'd like to schedule your free consultation with one of our team of advisors. That's akersfinancialgroup.com, or you can call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call on Monday to schedule your free in-person or Zoom meeting. Go to akersfinancialgroup.com or call 833-946-7384 to start planning for your retirement now. How to increase your retirement income during inflation. We'll discuss in 2 minutes in the second half of Winning in Retirement.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Hello, I'm Brian Akers, and welcome to the second half of Winning in Retirement. Here with me today is Jeff Akers. We've been working together for more than 20 years. 20 years in financial planning services, and Jeff is a certified financial planner practitioner and enjoys working with his clients.
Yes, I do.
And long walks at sunset.
Long walks at sunset. No. Sometimes, yes. It's a pretty sunset.
Yeah. Usually after bad storms, they come. All right, so let's talk about what we're doing for the show today, and that is this. Overcome your retirement fears. This is the second half of the show. If you missed the first half, there's a lot of things we talked about. We covered a lot. And basically, we're trying to talk about this fear, the fear of what's going on with all the information and news that's out there. Sort of makes us go stagnant. Basically, almost like in quicksand where you don't want to move your feet at all. It also makes us make quick decisions that might be wrong. But we're telling you this. You need to do a plan. That plan has to be your financial plan, where we talk about your situation and understand where you are now so we can take you to where you need to be.
All right, keep in mind, that's not your brother-in-law's financial plan. It's your financial plan because you are unique. Your situation's unique. So we need to make sure that we take care of what you need and not what somebody else might need.
Absolutely. So when you hear information and advice from someone else, you listen, you take the pieces that could apply to you, but you don't go out and change everything you're doing. If you really, I was going to try to be nice about it, but honestly, what happens is this: people come into a financial planner's office who have done it 30-some years, like me.
Yep.
And they'll say, "Oh, this person I talked to the other day said I should draw Social Security at 62," and I'm like, "Okay." And I say, "Well, do they know your situation?" "Oh no, I don't tell them anything." I said, "Well, then none of that what they say applies because this is why." And I start for like 5 minutes explaining why it doesn't apply to them. And the thing is that you go to a doctor, you go to an advisor to get added advice so that you can overcome fears, noise, bad information that's out there that doesn't apply to your situation. Now, the reality is this quarter, this second half, we're talking about this, how to increase your income during inflation. So one of the things we have for people is the fact that things cost more. We need more income. So this is retired people and those about ready to retire where they have this fear of, do I have enough money? That's a normal fear. That's always been happening.
Right. That happens all the time. I mean, I talked to a lady the other day who's retiring, and she's confident that, okay, we've got the right plan, but she's still kind of got that, do I have enough? And so I'm able to look at what she has and say yes.
When someone says, do I have enough? Typically, they care enough to already have enough.
They have enough, right?
The ones that don't say anything and don't look at it,
right,
I would have more of a fear for.
Yes, they usually have debt and no savings.
Right. So if we were going to talk to you, you were going to call in, and we had one question to ask.
Only one question?
You could ask one question to the person on the other end of the phone. What would your question be?
I think I might go with, how much debt do you have?
Okay.
I think that would be my one question.
Yeah.
That tells a lot about a person's situation. If there's a lot of debt, then the income coming in isn't enough to satisfy what they need.
Right.
If they don't have a lot of debt, then 9 times out of 10, they are great savers, and they've probably got money saved up somewhere too.
That's pretty good. So you like stealing my answer.
That's my one question. What was your one question going to be?
I normally say is if you have your mortgage paid off and you walk through that door, I'll find a way for you to retire.
Okay.
So I quantify the debt all the way down to mortgage. But the reality is this, is that when we're dealing with inflation and rising interest, if you have debt, that's going to rise.
Yes.
Debtors should fear inflation and rising interest rates because it will cost you more to borrow money. Right. If you're a saver, you're finally excited. For the first time in 10 years, rates are coming back up a little bit to where you might actually make a little bit of money.
Right.
Not a real rate of return where you beat inflation after tax. Imagine inflation at 9% and, they raised your rate to 1%. You're not keeping up with inflation. It's not that exciting.
You're still losing, but your emergency fund is making something.
Yeah, instead of $100,000 making $100, you're going to make $1,000.
Right.
I mean, it's better.
Right.
It also increases your taxation on it.
We'll take better in every circumstance, though.
Right. So some of the things that we try to talk about on winning in retirement is the fact that we want you to know what it takes to win in retirement. If we had to say what our goal is for people that walk in to see us, is we want you to win in retirement. Now, the hard part is it's your version of winning. Our version of winning is the fact that you pay your bills, your income's coming in, and it's going to keep up with inflation over time. And your income's reliable and sustainable. All very important things. So what has to happen is this. When you're talking about income and you want to increase, especially during an inflationary environment, you need to know where your money's coming from. So what do you do when someone wants to talk about increasing income, Jeff?
So one of the things that you mentioned earlier was about, the friend told me that I should take Social Security at 62. When it comes to Social Security, one thing that we can do to make our Social Security benefit increase is wait to take it. And so one way to increase your retirement income is wait to take Social Security. 62 is the earliest you can take it, but if you wait to full retirement age, you're going to get more. And if you wait to take it until age 70, you're going to get even more. Now, here on the radio, I can't tell you this is the right time for you to take it because everyone's circumstance is different. That's the point Brian was trying to make before. And we need to look at your situation and determine what's the optimal time to take Social Security for you to get the most out of it for you.
All right. So imagine we want to raise your Social Security payment. That sounds impossible. Well, if you have a spouse, a husband and wife, you have a couple, and what you're talking about is their situation, you might want to have the one with the highest income, the highest Social Security number, to actually wait longer and take the lower income earlier, especially if the lower one is less than half of the higher one.
Right. Yeah. If when you're both taking Social Security, the higher one, whatever they make, if half of that is more than what the other person was going to make anyway, then they're going to step up to that half of the benefit. So that's the way to allow the big one to grow while the smaller one you're using to live on.
Yeah, so Social Security is a decision that should be, you need to talk to a financial planner when you're dealing with it.
There's a lot goes into it.
I've been a little frustrated recently when I send clients to an actual office, Social Security office. Like we do it online, but some clients have a complicated situation, and they'll need to go in and make sure everything's right at Social Security. And then they go there, and Social Security says, "Oh, you could have drew this 6 months ago, so we can go backwards and lock your money in at a lower rate."
Right.
So anytime you hear that, what you got to think about? Oh, that's more money. Oh, that's nice. 6 more months times my payment, $2,000. That's $12,000 more dollars.
I get a lump sum.
But the reality is, they just reduced your Social Security for a lifetime.
Right.
Your payment by normally 0.5% a month. So if they go back 6 months, you're 3% less locked in for life.
Yeah, and that's not good. Now, Social Security, they're not allowed to give advice. They can only tell you, here's what happens if you do this. Mm-hmm. But sometimes it kind of comes out sounding like advice.
Yeah.
And it's usually not for your best interest.
Well, yeah, that they see numbers and they see a lump sum, and some of the counselors believe that lump sum's what you should always try to go for.
Right.
And I think you got to know your situation. Social Security decision to me is based on income you're receiving and life expectancy on what you expect it to be, and building the right answer within. Also understanding the noise versus the news when it comes to Social Security and how long it'll be around.
Oh gosh. Yeah.
And how it's going to happen. The news this year, or the noise this year, is that Social Security is actually going to be able to survive an extra year.
Yeah.
Because they said the numbers were better.
Right. Yeah. Okay.
Wow. And so instead of, basically they're saying 2035 again, it's back up to there to where Social Security doesn't have to make a change before lowering our Social Security income by 20%.
Right. But that's okay because next year they'll change the number again. It'll be something else.
Well, the reality is on your Social Security statement for many years, they put a clause in there saying that in the future, if something's not changed, they will have to lower your payment. Mm-hmm. So even Social Security is not a guaranteed income stream for people to the future.
Right.
My opinion as a financial advisor is that Social Security, you need to think about it, but you need to understand you need to have more than just Social Security to retire because you cannot count on that as your only thing. It's sort of guaranteed poverty level is what's provided there.
Right. And it could be even below poverty level to the future.
It could be, absolutely. I believe ultimately be means tested. So if you're a higher income person and that's a big part of your income, make sure you have more savings. You need to save and build some money up on your own. Also, when we're talking about increasing your retirement income, what other ways besides your retirement decision? One is investing for dividends over growth, where dividends are what has been proven to help people survive inflationary times.
Right. It helps with inflationary times and growth stocks, just by their definition. Instead of taking money, any profit, and giving it to shareholders, the growth stocks are reinvesting it in their company to try and make the company grow, which is all well and good for that company. But when you're in retirement and you want income, you can't take a fraction of a share of stock and go out to eat with it. You need cash. And so dividends give you some cash. And dividend paying stocks is a great way to increase your income on a monthly basis by getting some cash.
The next concept would be this, properly using whatever annuities you have that you might feel stuck in for income. If they have income riders on your variable or fixed index annuities, you need to know how to draw income, how to use it. Very important and very, it's a one way of raising your income without changing something else.
Right. So it's important to know what you have. A lot of folks have come in and they'll just say, well, I've got this annuity. And they might repeat something that they were told when they bought it, but then I'll read through it and say, well, here's what it does. Here's how it works.
Right.
Here's how we can use it.
I really think that people should think about not chasing yields for income. So if someone says, oh, this one has a higher yield, I've seen people look on their stock portfolio or on the basically solving for yield, like a 10% and higher, they'll buy that stock. Usually the stock has issues. That's why the yield's so high. And the stock's going to probably go way down. You're going to lose your principal while they might pay a dividend for a short period of time.
The yield's going to go down because they're going to lower the dividend payment.
As you can tell, these quarters are flying by today because this situation, this summer of 2022, we're talking about overcoming retirement fears, is the topic of the day. It's the topic of each and every day in our financial life as we guide clients. Now, at Akers Financial Group, we want you to truly be stress-free as you retire. We want the best part of everything that you're doing to not have the stress that's related to overcoming these retirement fears. We want you to know that your retirement and income and investments are all fully taken care of by the team of advisors at Akers Financial Group. If this is what you want, the future you want, go ahead and give us a call. You can give us a call, 833-WIN-RETIRE. That is the 833-WIN-RETIRE. We'll give you a call back on Monday to schedule your free in-person or Zoom meeting. Go to AkersFinancialGroup.com or call us at 833-946-7384 to start planning for your retirement now. Feeling overwhelmed? Listen to the fourth quarter that starts in just 2 minutes.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Thank you, Mr. Announcer, and welcome back to Winning in Retirement. I'm Brian Akers. Here with me is Jeff Akers. We're certified financial planner practitioners from Akers Financial Group, located right here in Maryland, but we work with people all around the state of Maryland and all around the U.S., actually.
And even around the world.
Yeah, we do have a few different countries. It's weird when there's such a time difference trying to figure out when to talk to them. But thankful for Zoom and the ability to do virtual meetings is incredible.
Technology is awesome.
Yeah, so this show today has been called Overcome your retirement fears. Overcome your retirement fears. And the way is to know your plan so that you can pick and choose what applies to you and what changes you need to make your retirement last a lifetime. It's your plan. It's all about your plan. So if this show, you want to find out more information, you can actually hear this show again by going to our website, AkersFinancialGroup.com. Hit the radio tab, and you'll see the show up there as quick as we can on Monday. To have that show there, you can hear it through our website. You can also hear it through Odyssey.com and Spotify. Have the show on there also.
Cool.
All right. So, Jeff, people have been listening since 11 a.m. They've been hearing our talk about overcome your retirement fears. We've covered a lot of topics, and we actually have missed another 50% of our topics we want to cover because there's so much going on in the concept of overcoming fear, where people are actually feeling overwhelmed by the news, the information. Now, when you hear someone feels overwhelmed on the retirement thoughts, how do you start with someone like that?
When you're asking the question, do you feel overwhelmed? I was going to say, well, yeah, because there's so much in the show and it's gone by so fast.
Yeah.
But when people come in and they're feeling overwhelmed about their financial situation or the noise that they're hearing in the media and everything, I just ask them questions about, okay, what is it that you're hearing? And then try to explain the truth about what's going on with different things. Recession's one of those talks. So we'll talk about what's a recession and how's that going to affect you and your circumstances. Once we figure out who you are, where your circumstances are, then we can figure out which of these issues that are overwhelming you do we need to even deal with. Mm-hmm. And once we have it narrowed down to what to deal with, then we start coming up with a plan. How do we take care of that?
Yeah. I was trying to think about the way I try to answer it. Then I started thinking about meetings I've had recently. And what happens is if you're overwhelmed, you just don't know where to start. And so when I come up with a way to start, I start with let's keep it simple. And let's talk about where we are right now. What do you own? Where's the money? Where do you save? What is your budget like? What's your taxes like? Understand all that's going on right now. And then let's apply what we think is going to happen over the next few years. There are some things that we believe are going to definitely happen. And one of them is that tax rates are going to go up. By law, they're going to go up in 2026. We know that for sure. That makes taxes lower now. I know that tax-free income is better for us when we retire, because then if I have money in retirement that's tax-free, it's all mine. I don't have to share it with anybody.
Yeah.
I mean, that's a good thing. So keep it simple. The basic thing starts with this. Know your expenses. Sounds boring. We're not saying get on a budget right now unless we have problems, but know where the money's going.
Right. We're going to have a certain amount of income, and we need to know where that money's going. And honestly, I've been surprised at how many folks that have been clients for a while, and I'll review with them and I'll say, is your income meeting your expenses? And they still say yes. And it's because they've developed good habits. They know what they're spending, and they know how much they've got coming in, and they just stick to it. They're able to do that.
Yeah. Now, what happens when you hear a show, Winning in Retirement, you have people that call and do it right away. Those typically are savers, people that have a lot of caring about their retirement planning, and they make the action happen. They don't put it off. That's not everyone that's listening. There are people who will never call because they feel like they're overwhelmed and they are afraid to start. They want to get things a little bit better before they start. And they don't know, I should call now because they'll actually help us get better.
Right. Now is the right time to start.
That's very important when it comes to a financial planning advisor, is having someone to talk to, understand where you are, and then make wise decisions in every category.
Right. We take the next right step. That's all we can do.
Now, financial planning, we start with financial planning fees. Yes, we charge a fee for that. If we implement the plan, it could be through a commission or through a fee based on money management. We design our portfolios as people get closer to retirement to take lower risk so that we are not losing money in a down market. We try to balance out. Yes, our stock side does lose money because it's part of our portfolio design. We practice what we talk about. This is how we implement for our clients. Clients are coming in now. Market might be down 15 to 20%. Their portfolio is not down that far.
Right.
And because they don't take the risk, because like we've been saying for a long time, don't take the risk. If you can't, basically don't risk the money that you can't afford not to lose. You got to be careful with everything you got.
Yeah. Earlier in the show, we talked about having the right allocation for you, and that can take some angst, if you will, out of all the noise that you hear. But if we can be in a position where you're taking your income from something and what you're taking it from never goes down, then that's a great place to be. We never want to be forced to sell something at a loss. So we want to have some that's protected and some that, as Brian said before, is risk investments in stocks.
And that's called designing your income plan, knowing where the money is coming from. And then in our design, we try to know where the next bit of money is coming from without giving you all the money right away.
Yeah, where's it coming from now, next year, 5 years from now, and so forth.
Yeah, trying to get it to grow is very important. Cost of living adjustments, increasing income are all features of things you really need to make sure you know about. One of the concepts we love is paying the least amount of tax for a lifetime. We don't want to pay too high a tax. We want to pay not a fair amount, but the lowest we can.
As low as we can legally is what we want to pay.
And it's not bad to pay tax once and never again. That might be called a Roth conversion.
That has been an excellent thing to do this year. Every situation economically has opportunities. That has been an opportunity.
We also believe that people need to evaluate their plan, especially if they're still working. They might need to look at it and say, are we ready to retire? Is everything in order? If it's not, you might have to work a little longer. Not the favorite thing if you've already announced your retirement date, but sometimes the things get ahead of themselves and they announce retirement date, then they come and see us, oh, can I retire? It's like, well, it'd be nice if you worked one more year, you'd have all this cleaned up and then things would be perfect.
Right.
But they already announced I'm retiring. Well, you came to us a little bit late. But the reality is what we'd love to see would be someone that knows their budget, completely out of debt, have the income plan with the idea that's going to increase over time, portfolio balance, estate planning done, insurance coverage is in place, understanding that you have the right liability limits, long-term care. Once that's all put in and established, and then we apply it to your beneficiary, your estate flow, that's the beginning of a good plan.
That sounds like a whole lot of stuff, and just listening to it might make you feel overwhelmed.
Yep.
But that's why we're here to
let us do
that for you.
Let us do it for you. It's like this. It's I was going to sing "You Got a Plan" in me, but because I've been listening to Toy Story too much.
We want them to keep listening to us.
Yeah, I'm not going to sing at all. But the idea is this: is that you hire a planner to do the work, and they'll say, oh, "These are the things you need to do. What would you decide?" And then basically guide you through some decisions. You decide. We help implement it. That's what a good planner does.
Right. Make the next right decision. I love that.
Absolutely. And the other things we need to think about when you're feeling overwhelmed or having retirement fears, or should I retire or not retire? You need to not chase returns. Imagine, oh, I lost money. I need to make double the return to try to get back up. I know someone said that's listening to the show.
At some point, that's right.
Okay, I'm going to double down. I'm going to put more money on the high-risk stock to reach my plan.
Yeah, and then it's a high-risk stock. It may or may not do what you want it to do.
Yeah, it's not something that is in that high probability range.
No, it's a low probability range at that point.
All right, so our answer is let's make sure you can retire. Let's make sure we're going to hit our goals. Let's not risk that. Let's make sure it happens. And we can do that by having the lowest amount of risk to reach your goals and a balanced risk to keep up with inflation.
And, I was just thinking about chasing returns and the ways that people do that. One is, they've got that high-risk stock. It went down. They say, well, I'm just going to write it back up. Another one is they might listen to the news and they'll hear, oh, this mutual fund or this asset class was the best last year. And they're like, okay, I'm going to buy that because it'll do well. Well, whatever did best last year, that was last year. Mm-hmm. It's probably not going to be best this year. It might be among the worst this year. So That's a horrible way to chase return.
And if you try to buy the lowest, there's a reason it might be the lowest. Right. You want to buy something that's low for a reason that they can correct.
The difference between investing and gambling.
I believe it's a great time for active investment, active managers, active portfolio managers that watch the stock market for us and buy and sell based on what is the right place to be to the future.
So they're not married to an index. Some computer says this is what you're going to own.
Yeah.
It's a person picking and choosing.
All right, Jeff. So as we come into a close of our show today, the show's been called Overcome Your Retirement Fears. What we want is people to understand that it's normal, and a lot of people have some fears about what's going on.
Yes, there are a lot of fears out there. A lot of times those fears are amplified by listening to the noise that we hear in the media. And so we just need to pay attention to what is our situation and what applies to me.
Absolutely. There's a big difference between important information and urgent information. That is how if an advisor will apply what is going on in your life and what decisions you have, trying to help you with the urgent and making priority on what's important and what to do right now.
Yeah, and you don't want to be stuck going from crisis to crisis.
Yeah, we don't want to just do your retirement plan. We do want to do yours and like a few other people and yours and more people more, right?
Right. And if we do a good job for you, we're kind of counting on you to tell your friends about us.
Yeah, that's one of the best compliments they can give us is when they give referrals to our company.
Yep. I love that.
Absolutely. So the show today is called Overcome Your Retirement Fears. We've hit on a bunch of topics. We've covered things about understanding the difference between noise in the news and the news. We did beat up the Maryland retirement tax elimination and tried to explain it as a tax credit. Let's explain it for what it really is. It's a tax credit that will help your taxes if you keep your income below the limits.
Right. It's a step in the right direction, but it's not all the way to what you think it is.
No, those limits don't get burnt if you're over 65 by making just a little too much money and lose the credit completely. So understand that. We talked about inflation, talked about how increasing income, how to do that. I think that's an extremely important concept, and we didn't cover anywhere near all the topics there.
Right. We touched a little bit on Roth conversions, which is another important topic, but there are other shows where we covered it in more detail.
Absolutely. So thank you very much, Jeff. Good job.
It was a good time.
I appreciate it. One quick. All right. So you've been listening to Winning in Retirement. At Akers Financial Group, we want you to be winning in retirement. To help people do that, we offer a free consultation with one of our team of advisors where we talk about your retirement plan. So to begin winning in retirement, go ahead and go to our website at akersfinancialgroup.com. You would scroll down to schedule a meeting section and let us know you'd like to schedule your free meeting. That's akersfinancialgroup.com. Or, of course, you can give us a call at 833-WIN-RETIRE. That's 833-WIN-RETIRE. We'll give you a call back on Monday to schedule your free in-person or Zoom meeting with one of our team of advisors. Start planning for your retirement now. Go to akersfinancialgroup.com or give us a call at 833-946-7384. Thank you for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated and investment advisory services through Kalos Management Incorporated. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Advice given on Winning in Retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment.